Hello and great welcome, and hope that each one of you as always are absolutely fine in finest spirits. So today, coming directly to the business end, we are starting a chapter issue and redemption of debenture, and most of you were quite worried because those among you who have subscribed to our courses must have been wondering actually, sir, why the folder on issue of debenture and issue of debenture is vacant. The reason being is that we wanted to completely revise this particular chapter, so that was the only reason, because we always believe in giving you the best, latest, and of course the finest one. So coming directly to the debentures. What exactly the debentures are? If suppose I am going to buy the debenture of a particular company, indirectly it means actually in lieu of that I am simply going to receive a paper sheet. That paper sheet is nothing but known as debenture certificate, in which the company in which I have invested my money, let us say I have invested 10 lakh and let us say rate of interest is 15%. So the company will issue me a certificate wherein company will specify very clearly that what is the rate of interest which the company will deliver to me till the time my debentures would be redeemed. That means every year I am going to receive the what we call coupon rate of interest, no doubt about that. And further, the company will specify very clearly after what period of time company is going to redeem my debentures. So often entities issue debenture to raise funds and finance. It is simple. And second important point is that debentures are nothing but certificate, as I just told you, that acknowledge the fact that entity has taken a loan. So debenture certificate simply acknowledge the fact that company has taken a loan from us. Our debenture certificate specifies the rate of interest that the entity is supposed to pay me till the end of the redemption, as I just told you. Further, our debenture certificate will also mention the time period after which the debentures will be redeemed. That means the moment I am going to receive the debenture certificate, I will come to know after what period of time my money I will get back. So in simple words, what if somebody asks you what is debenture, so you should be in a position to tell a very brief, concise and compact answer that debenture is nothing but it is an acknowledgement of debt. Now coming to the next point, how many types of debentures are there? Now the classification of debentures is based upon their functionality. For example, debentures can be segregated into two parts on the basis of convertibility. On the basis of convertibility, debentures may be non-convertible debentures and convertible debentures. Non-convertible debentures means these debentures cannot be converted into some other financial instruments like equity share, preference shares, whereas convertible debentures can be converted into other financial instruments. Now, convertible debenture may be further classified into two types, partly convertible debentures and fully convertible debenture. Fully convertible debentures means the full amount of debenture is convertible into other form of financial instruments, whereas some portion of the debenture can be converted in case of partly convertible debentures. Now further, the debentures are also categorized on the basis of security. On the basis of security, debenture may be categorized into secured debenture and unsecured debentures. Secured debenture. First of all, I have seen actually student are nursing a bit of what we call confusion regarding this. So just pay attention towards here. For example, this is the balance sheet of a particular company, and in the balance sheet it is written 10% debentures 100 lakh. Further, it is also written in the balance sheet that on the security of land and building. What does it mean? That means this company has issued 10 lakh debentures, 100 lakh debentures to the debenture holders. And if company failed to pay the amount to the debenture holder as per the specified time period, in that particular case, debenture holder shall have the right to dispose of this land and building and recover their amount. So that is known as secured debentures. It is also known as debentures are secured specifically, that is specific security, particularly on a particular asset, that is land and building. Now just pay attention to the other example. Now this time in the balance sheet 10% debentures are written. Once again the amount is happened to be 100 lakhs. Now further in the bracket it is given that these debentures are of floating charge. Now floating charge means if suppose tomorrow this particular company gets liquidated, in that particular case this debenture holder will have a right to sell off all the assets of the company and recover their amount. So this time the debentures have a charge on not only a single asset but all the asset. Correct? Now further, the debentures are categorized on the basis of redeemability. There are two types of debenture, redeemable debentures and irredeemable debenture. Honestly speaking, nowadays a company can issue only redeemable debenture. because after the introduction of Companies Act 2013, no company can issue irredeemable debenture. But that doesn't mean that we cannot come across irredeemable debenture on the balance sheet of a particular company. The reason being is very simple, because a company might have issued the debenture prior to the introduction of 2013 Act. So in that particular case, debenture may still be reflected in the balance sheet of a particular company. However, after the introduction of Companies Act 2013, debentures can be issued only which are redeemable. Then further, the debentures are also categorized on the basis of registration: registered debenture and bearer debenture. Registered debentures means I am the sole what we call owner of these debenture. Whereas if debentures are not registered, just bearer debenture, in that case the person who bears the debenture, holds the debenture, will be considered as the owner of the debenture. Now after going through all these terminologies, now we are in a position to what we call get the difference between the debenture and the shares. Very simple differences. Debentures are always considered as a loan, whereas shares are always considered as a part of capital. Debentures are creditors, while shareholders are owners of the company. Debenture holders will always get interest, irrespective of the fact whether company incurs losses or profit, while shareholders on their investment will always get dividend. But in case of debenture, one advantage is that they are going to get fixed rate of interest every year, irrespective of the fact whether company actually undergoes losses or profit. On the contrary, actually, in case of shareholder, it could be a possibility that they might not get dividend at all, because if the company is not going to get the profit, they cannot be what we call given dividend. So that is why we say that as far as income or the dividend is concerned, that is quite variable, because sometimes the debentures are given at a particular percentage, some other time it may be given at a percentage other, which may be different from the earlier one. Further, debentures can be issued at a discount. Shares cannot be issued at a discount as per Section 53. However, there is one exception. A company can issue sweat equity shares at a discount still. Correct? Sweat equity shares are issued to employees or the directors of a particular company against what we call having their expertise or their technical know-how or their knowledge. That is sweat equity shares. Further, debentures disadvantage, that is, they don't have any voting rights, whereas shareholders have the voting rights. Further, as a student of commerce and professional course, you need to know what is the maximum redemption period. In case of debenture, it is the mandation upon the company to redeem the debenture within a maximum period of 10 years. That's a different matter. A company may actually redeem the debenture within a period of say 3 years or 4 years or even 3 years, but the maximum period should be 10 years. However, again, there is a rider, there is a condition, there is an exception. If the debentures have been issued for infrastructural projects, for example, like construction of dams, construction of roads, construction of big, what we call projects, in that particular case, the redemption period is 30 years. Maximum period is 30 years. Now we come straight to the points. These are the notes. Please pull down your notes and open section number 1. Now, section number 1 is similar to issue of share capital, correct? So, just to open the chapter, we have kept this particular section, otherwise there was no need. Now, coming to this particular section, as you can see in this particular section, this is what we call your question number 1, 1.1. Here it is stated that Reliance Limited has issued 10,000 debentures, 12% debenture. 12% is also known as coupon rate of interest. That means each year company will pay you interest. Face value of the debenture is 100. These debentures have been issued at par. Now the first installment is 25 on application, as is the case in case of what we call shares. Then second installment is in the form of rupees 50 on allotment, and final call is in the form of rupees 25. Further, the question says that company received 13,000 debenture and 3,000 applications were rejected. So quite obviously now we are having 10,000 debenture, and those 10,000 debentures will be allotted to the remaining 10,000 debentures. So no problem in this particular case, as I've already told you. As we normally do under what we call shares, first of all, we used to write number of debentures issued. Now in this case, number of debenture issued is 10,000, isn't it or not? And application received. Applications received is equal to 13,000. So you will write here 13,000. Now, out of 10,000, as we have seen, 3,000 debentures have been rejected. Rejected means these applicants were not allotted a single debentures, so their amount will be refunded at the rate of 25, because application rate is 25. So 3,000 into 25 we will refund. We are left up with 10,000 debentures, and remaining applicants are also 10,000. Obviously, now these 10,000 debentures will be allotted to the remaining applicants, that is 10,000. Correct? This is what we used to do under share capital. Similarly, we are going to use same what we call policies, same methodology, in fact, to solve the question. For example, your first entry in this particular case will be, what? Bank account debit, 13,000 applications we have received at the rate of 25, that is equal to 3,25,000. Two debenture application, as we used to write share application account, 3,25,000, 13,000 into 25. Is it clear to you? Receipt of application money. Then under the second entry, we used to adjust the application money. Similarly, here we are going to adjust the application money, debenture application account debit, 3,25,000. But you have to exercise a bit of caution here in the sense, because under share capital, we used to write what? We used to write share capital account. So please, for God's sake, don't write debenture loan account or debenture capital account. Simply write to debenture account. So to debenture account. When we will transfer the amount to debenture account, we will always take the number of debenture issued. Application rate is 25. So 2,50,000 will be transferred to the debenture account. And because in this question we have refunded 3,000, rejected 3,000, so their amount will be refunded. So this will be our entry. So application money transferred to share capital and adjusted to refund. Now allotment money is 50. So debenture allotment account debit 5 lakh to debenture account. This is the due entry, being amount due on allotment. Now we will receive the allotment money, bank account debit to debenture allotment account, simple. Then similarly, we will pass the entry for debenture call account, and then we can easily pass the next entry, bank account debit to debenture call account. So this is a very simple case. Similarly, if we pick up 1.2, here it is stated that Renault India Limited invited application for 10,000, 9% debentures of ₹100 each at a premium of 50. So this time actually we are issuing the debenture at a premium, isn't it or not? So in this case, debentures are issued at premium. So your face value is actually 100 and your issue price is equal to 150. Now further, the question has stated that 25 is payable on application. So on application it is 25, 75 is on allotment. Now 75 is on allotment. That means 50 worth of premium is included in allotment, and share of allotment in the face value will be considered as 25. I have so many times told you, even under share capital, that whatever installments are given, these installments are given against the issue price. Correct? So out of 75, 50 is actually premium, 25 is your allotment rate, and then further balance. So what is the balance amount? Now balance amount is 50. So 50 will be on call amount. This is the first thing which you should do in your rough work. Secondly, now the second important point is debentures issued. How many debentures we have issued? We have issued in this case 10,000 debentures. You will write 10,000 debentures you have issued. And applications received. How many applications you have received in this case? Application received is equal to 13,000. 13,000 applications you have received. Now what is your first decision? 1,000 applications were rejected. So out of 3,000, 1,000 rejected means these debenture holders were not given a single debenture. You are going to refund their amount at the rate of 25. Application rate is 25. So remaining debentures are 10,000. Remaining applicants are actually 12,000 because 1,000 applications you rejected. And further, it is given applications were rejected and debenture allotted to the remaining debentures. So quite obviously now you are left up with 10,000 debentures and 12,000 applicants. So 2,000 excess application into 25, 50,000 you will take to allotment. So your first entry will be, in this particular case, your first entry will be bank account debit, of course. Your first entry will be bank account debit 13,000 into 25, 13 lakh 25, 3 lakh 25, 3 lakh 25. Now we will adjust the debenture application money. In order to adjust the application money, I will first of all write debenture application account. I will transfer to debentures. Whenever we are going to transfer, always take the number of debenture issued 10,000, rate is 25, 2,50,000. Now, as per the working, we have refunded 1,000 debentures to bank, 1,000 into 25, 25,000 will be refunded. And then I will write to allotment because 2,000 debentures have been taken to allotment. So 2,000 into 25, 50,000 you are going to write. Then we come to debenture allotment. Debenture allotment account debit. Actually, rate of allotment is 75 and 75 includes 25 face value portion and 50 as the security premium portion. So total 75, 7,50,000. Out of 7,50,000, I will transfer to debenture account. Number of issued debenture 10,000 into 25, 2,50,000. And then to security premium 10,000 debenture into 50. This is my due entry for allotment. However, out of 7,50,000, we have already received 50,000. So when we are going to receive, I will write 7,50,000 minus 56, that is 7 lakh. And similarly to debenture allotment account 750 minus 50, that is equal to 7 lakh. You can straight away write 7 lakh, correct? Then this is the call entry. After writing the call entry, you can make, this is the due entry for call money. The call money is 10,000 into 55 lakh, 5 lakh. Then you will have to write another entry, bank account debit to debenture call account. That is equal to 5 lakh, 5 lakh, which you can do so very easily. These are simple questions and you are not going to be asked any such question, to be very honest with you. It is just to actually open the chapter. Further, it is given in the question. Let me actually see, is the to Toyota Limited invited application for 6,000 13% debentures of 100 each at a discount of 10%. Now, first thing which you need to understand is that your face value is 100. Face value is 100 because discount is 10. So that means your issue price is 90. Question is telling us that your application money is 30 on application. So this application money I will write here 30. Rupees 25 on allotment. I will write allotment money 25. Issue price is 95. And then balance on first and final call. So what will be my call amount? We know that the total of issue price should be equal to 95. Out of 95, if I am going to subtract, if I am going to subtract 55, so that must be equal to 40 or something, 95. So my application money will be 30. Discount is 5. So allotment money must be equal to 30. So remaining amount is equal to 40. Is it clear to you? First of all, you need to find out that 30 minus 5 is equal to 25 because discount is always on allotment. Further, the question says that company received only 5,000 debenture applications. Now, in this case, debenture issued is equal to 6,000. However, we have received only 5,000. Debentures. I have already told you, in case of discount, you presume now as if you have issued only 5,000 debenture. In case of under subscription, you better now presume as if you have issued 5,000 debentures and you have received 5,000 debentures. This is how you have to pass the entry on such basis. So that is the reason when I am going to write my first entry, bank account debit to debenture application, I will write 5,000. I will presume we have received 5,000 debentures only and amount will be this much. Receipt of debenture application money. Then debenture application money 1,50,000 which we have received, we will transfer it to debenture application. In this case, no question of refund, no question of excess. Now debenture allotment, you have to careful. Allotment money actually is 10,000 into 25, 2,50,000 as I just told you. And discount you will debit 10,000 into 5, 50,000 and then you are going to write to debenture 3 lakh. Then bank account debit to debenture allotment account, you are going to receive 2,50,000, 2,50,000. Then you will pass the entry for call amount. Actually, call amount is not 45, it is 40. So please rectify it. So call amount actually is 40. So 10,000 into 40 or 45? It was 40 only. So 4 lakh, 4 lakh. This will be your entry debenture call account debit to debenture. And then you can pass the entry bank account debit to debenture call account 4 lakh, 4 lakh. So these are simple questions just to open the chapter. Now we come straight to the point. Section 2. Section 2 relates to issue of debenture for consideration other than cash. It means this time the debentures are being issued, but against the same we are not receiving cash. We might be receiving some other assets. As you know, it happens. In order to understand the complexities of this particular section, let's have a look over this. Windsor Limited purchased assets of Mark First Limited. Windsor Limited is the purchasing company. It purchased some assets. So this time we have purchased some assets and the purchase consideration is 9 lakh. Purchase consideration means the amount which you are going to pay for the asset. As per the agreement, purchase consideration was to be discharged by issue of 12% debentures of 100 each. Pass entries if debentures are issued at par. Now, if debentures are issued at par, then it is not going to make any problem. First of all, my entry will be sundry assets account debit. I have purchased sundry assets worth rupees 9 lakh. I can write here to supplier account. I can write here to vendor account. For example, this is the party from whom I have purchased. The name of the party is Mark First. I can also write to supplier company account. I can also write to vendor company account. I can also write to creditor company account. Correct? So, but it is better if the name of the party from whom we have acquired the asset is given. Then in that particular case, it is always better to actually mention the name of that particular party. So this is your first entry and this entry is common entry. Correct? 9 lakh, 9 lakh. You have purchased it for rupees 9 lakh. So you are going to present it here as 9 lakh. Number 1. Number 2. Now, as far as first case is concerned, here you are making the payment at par. So you are going to write entry Mark First account debit. You are going to debit the Mark First with the amount of purchase consideration. And because you are issuing the debenture at par, in this case, there is no problem. Now, as far as part 2 is concerned, under part 2, we are making the payment as per the question when debentures are issued at 10% discount. So how many debenture we will have to issue? First of all, I will pass the entry sundry assets account debit 9 lakh to Mark First Limited account 9 lakh. This is the entry for purchase of assets. Now the next entry is for payment. So how much payment actually you are going to deliver in this case? In order to know the amount of payment, what you do, first of all, write the amount of purchase consideration and then divide it by the issue price of the debenture. Issue price of debenture. Now what is the issue price of debenture? You are supposed to pay 9 lakh to the vendors, to the Mark First company. And face value of your debenture is 100, but you are issuing it at a discount of 10. So 9 lakh divided by 90. 9 lakh divided by 90. It will tell you how many debentures you are going to issue. That means you are going to issue 10,000 debentures. It means 10,000 debentures of rupees 100 each at the rate of 90 you will issue to make the payment. Is it clear to you? So that is the reason I will pass the entry like this. First, I have written the entry sundry asset account debit to Mark First account. Now my next entry will be Mark First account debit. Mark First account, I will debit it by the amount of purchase consideration. Then I will write here discount on debenture account. Because we are issuing 10,000 debentures, you can write in bracket 10,000 into 10. This will be the amount of discount. 1 lakh. And then you are going to write here to debenture account, that is 10,000 into 100. Debenture will always come with its face value. That is equal to 10 lakh. So you are issuing 10 lakh worth of debenture at a discount of 10% to the vendor. That means 10 lakh minus 1 lakh. 9 lakh actually you are making a payment for. Correct? Now third part of this particular question is if debentures are issued at 20% premium. So in case of third part, of course, my first entry will be sundry asset account debit to Mark First company account 9 lakh, 9 lakh. This is the entry for purchase of asset. Now the main question is how many debentures I will have to issue when I am going to make the payment by issuing the debenture at 20% discount. In that particular case, similar to the last one, first of all, I will write the amount of purchase consideration. Purchase consideration is 9 lakh. Now issue price is equal to 120. If I am going to divide 9 lakh by 120, it will be equal to 7,500. That means 7,500 debenture I will issue of rupees 100 each at the rate of 120. So on the basis of this, I am going to pass the entry now. Mark first limited account. What happens? Mark first limited account debit 9 lakh. Of course, you have credited the Mark first by 9 lakh. You are going to debit the same company by 9 lakh. Now you are issuing debentures. You have computed 7,500 debentures. You will write 7,500 debentures of 100 each. Debenture will always come at face value. So 7,50,000. Then security premium 7,500 into 20 you are going to write. So this is how the payment will be done. Correct? And here I have done the working also. Correct? Purchase consideration divided by issue price of the debenture. Similar is question number 2.2. You can manage this question of your own, but just to make the point clear, Quartas Limited took over assets of 2,50,000 and liabilities of 30,000 of Gold Limited. So Gold Limited is your vendor company for the purchase consideration of 3,30,000. Correct? Now in this question you have to be careful. You have to be careful in the sense that actually you are getting assets for rupees 2,50,000. And not only assets, you are acquiring liability also. That is 30,000. So logically you are getting assets, net assets worth rupees 2,20,000. Correct? However, the purchase consideration which you are giving in this case, purchase consideration is 3,30,000. So because you are making a higher payment and net assets are less, the difference will be termed as goodwill. So difference will be debited to goodwill. 1,10,000 will be considered as payment for goodwill. Number one. Again, the question has asked what will be our entry if we are going to issue the debenture at par, at premium, at 20% discount. So similar to the last question, we will pass the entry even in this particular case. First of all, I will write net assets account debit 2,20,000. And to Gold Limited. Gold Limited is the supplier company, is the vendor company. Gold Limited or the supplier company must be credited with the amount of purchase consideration, that is 3,30,000. So the difference will be debited to goodwill. However, if difference would have been over here towards the credit side, in that case I would have had written to capital reserve. Now second entry will be Gold Limited will have to be discharged. Now first case is that we are issuing that debenture at par. However, I have directly taken case B in fact, just to make the point clear, because in case of debenture issued at par, I will simply write Gold Limited account debit to debenture account 3,30,000. In case of par, there is no problem. Now, let us say we are considering part B. We are leaving part 1. We are considering part B. So first entry will remain same. Now, as far as entry for payment is concerned, I will write Gold Limited account debit 3,30,000. Now I will have to compute how many debentures I will have to issue them. 3,30,000 and debentures are being issued at 10% premium. So I will divide it by issue price 110. That will tell me 3,000 debentures. So that means in order to make the payment, I will issue 3,000 debentures of 100 each at 110. That means at 10% premium. So that is why my entry will be in this case to debenture account 3,000 debentures. Don't write 3,300. Write here 3,000 debentures. 3,000 debentures of 100 each, 3 lakh. And then you write to security premium 3,000 into 10, 30,000. So 3 lakh and 30,000. This is how you are going to make the payment. Correct? Actually, same question I have done here also again, same part. So no problem. Now we pick up part 3. Now part 3 is that actually when debentures are issued at a discount. Now if debentures are issued at discount, see my first entry will remain same. Net assets account debit 2,20,000, goodwill account debit 1,10,000, to gold limited 3,30,000. So first entry I have simply written same. That entry will remain same, of course. Now as far as payment is concerned, we have to pay 3,30,000 to the gold limited. And we are issuing debentures this time at a discount. So first of all, I will have to compute how many debentures I will have to issue. 3,30,000. First of all, I will write here 3,30,000. And then I am going to discount is 20%. So I will divide it by 80. So if I am going to divide it by 80, I will get 4,125 debentures. That means 4,125 debentures of 100 each at the rate of 80 I am going to issue at a discount of 20. So gold limited account debit 3,30,000, then discount on issue of debenture 4,125 into 20, 82,500, and then I am going to write two debentures 4,125 into 100. This is how we have to pass the entry. Correct? Or you do one thing, instead of cutting it, what I will do it for you, just allow me a second. We will remain it as part A. I will rectify in this manner. I will cut this line. There is no use. And this line also. So now it is okay. If we consider part first, wherein we are issuing the debenture simply at par, so in that particular case, the number of debenture I will be issuing 3,300 into 100, 3,30,000. If I am going to issue the debentures at par, because if I am going to issue the debenture at par, it means I have to pay 3,30,000 and I am issuing the debenture at 100. So quite obviously 3,300 debentures I am going to issue, because case number 2 I have done here itself. Correct? So anyway, this should not pose you any problem. These are simple questions and you have done it so many times in your earlier phases of education. Now we pick up 2.3. Top limited purchased assets of 8,40,000 and took over liability of 2 lakh. So 6,40,000 worth of net assets we are receiving. But purchase consideration is 5 lakh. This time amount of net asset is more than the purchase consideration. So the difference will be credited to capital reserve. So this is common entry. I have written this is common entry for all the cases. Correct? Net assets account debit 8,40,000 minus 2 lakh. That is 6,40,000. And we have to pay to bottom limited. Bottom limited is the vendor company. So the difference will be capital reserve. This is common entry for all the cases. Correct? Now, in this case, your first point is if issue of debenture is at 20% discount. If issue of debenture is at 20% discount. If issue of debenture is at 20% discount, in that particular case, what we are supposed to do? As I've already told you, how much payment I have to make? I have to make a payment of 5 lakh. And issue price of the debenture is 20%. Face value of the debenture, if not given, we always presume it as 100. So 100 minus 20. So 5 lakh divided by 80. So 5 lakh divided by 80 debentures I am going to issue in this particular case. That is near about 5 lakh divided by 80 is equal to 6250. 6250 debentures. 6250 debentures. So accordingly I will pass the entry. My entry will be like this. Part 1. Bottom limited account debit 5 lakh because I have to pay to the bottom limited 5 lakh. Discount on debenture account 6250 debenture discount is 20, 1 lakh 25, and 2 debentures 6250 into 100, 6 lakh 25,000. And here I have shown the working also. purchase consideration divided by issue price of debenture, so 6250. Now case number 2, what will be your entry if you are going to issue 15% debenture at 25% premium? If you are going to issue 15% debenture, so you have to pay 5 lakh. And this time you are issuing your debenture at the rate of 25% premium, so 125. So in case number 2, how many debentures you will be issuing? You will be issuing 4,000 debentures. So this is your entry number 2, that is part 2. In case of part 2, when I will make the payment by issuing the debentures at 25% premium, bottom limited account debit 5 lakh. First of all, I am going to write, then 2 15% debentures, because we have already computed that we have to issue 4,000 debenture into 104 lakh, and then 2 security premium 4,000 into 25, that is equal to 1 lakh, and I have done the working here also. Now case 3 is also given. Case 3 is that you are making the payment 50% in cash and 50% through issue of 15% debenture at issue price. Now in this case, in case number 3, you have to make a payment of 5 lakh. In order to make a payment of 5 lakh, 50% payment, that is 2,50,000, you are making it by way of cash, isn't it or not? Is it clear to you? And 50% through issue of 15% debenture at 25% premium. So balance of the payment 2,50,000 you will have to make by issuing debenture at 25% premium. So 2,50,000 balance purchase consideration divided by issue price 125. This is how you are going to pass the entry. For example, in case of part 3, bottom limited account, you are supposed to make a payment of 5 lakh to bottom limited. So 2 cash, 2,50,000 as I just told you. Now further 2,50,000 you will have to make the payment. 2,50,000 divided by 125 will be equal to 2,000 debenture. I have done the working here. 2,50,000 divided by 125. So you will write here 2 15% debenture. 2,000 into 100, that is equal to 2 lakh. And 2 security premium, 2,000 into 52, that is equal to this much. And similarly is the last case. The last case states that 20% by way of bill of exchange, 30% through cash, 50% through 15% debenture issued at par. What does it mean? Now under case number 4, you are supposed to make a payment of 5 lakh. Now question is telling that out of 5 lakh, this time 20% portion. Now 20% means 1 lakh. So 1 lakh payment you are going to make through issue of bill of exchange. 30% through cash, you will compute 30%. 30% of 5 lakh is 1,50,000. That is by way of cash. And balance 50%, that is equal to 2,50,000. So that will be through 15% debenture issued at par. Issued at par. So that means you will issue, you can simply divide it by 100, 2,500 debentures of 100 each. This is how you are going to make the payment. So this will be your part 4. Under part 4, your entry will be bottom limited account debit 5 lakh. You are making a payment through bills of exchange. That payment is equal to 10% or 20%. So 20% of 5 lakh actually is 1 lakh. I have written here 1,20,000, right here 1 lakh. And 2 cash payment is 30%. So 30% payment is equal to 1,50,000. And then balance 2,50,000. Balance 2,50,000. You simply write 15% debenture, 2,500 debentures equal to 2,50,000. Equal to 2,50,000. You need not require to write security premium because you are issuing the debentures at par. Is it clear to you or not? So this is how you are going to pass the entry. Your entry will be bills payable 1 lakh, 2 cash 1,50,000 and 2 15% debenture, 2,500 debentures of 100 each. This is how you are going to pass the entry. Correct? So we finish it up till up to this particular session. In the next session, we'll pick up some other issues of this particular chapter.